Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, the 1st of February of 2022, and let's say goodbye to January. It happened quick. It was definitely a volatile month, both stocks and bonds, because we had the 10-year Treasury, Federal Reserve, all the headlines, and now we have earnings right now. So let's just jump right into it. On record, it's one of the worst Januaries that we've seen in quite some time. In fact, if you take into stocks and bonds and take a 60-40 portfolio, it's the worst that we've seen since going back to 1988. So that being said, January didn't start off too strong. And now we're working our way back into markets rebounding. As you may have followed along or maybe not, we have a replay of our market outlook for last week for this year. Last Wednesday, I actually gave this webinar to our clients, and it was in the middle of when the Federal Reserve actually updated and gave their, Jerome Powell talked about the outlook and the guidance for 2022. Again, tapering, again, all that means is pulling the punch bowl away from the party and ultimately raising interest rates. In fact, the markets actually took care of that for him, and by the bond market last week, we're seeing that in the mortgage interest rates rise as well. So the real question now is the Federal Reserve behind the curve, meaning too little too late? This is what the main story is going to be for this year. In the meantime, the volatility persisted. In fact, last October, we raised cash in client portfolios to anticipate more volatility. I've been talking about that in great lengths, and we were positioned extremely well, and we took advantage of some opportunities that the markets presented over the last few weeks. Now, are we out of the woods? No, you know what? We're still below the moving averages, if you will. So we're watching that closely, but we had the NASDAQ close to bear market territory. Rob, what's bear market? It's when the indices and index drops 20% or more, and in terms of a calendar year or even just a year, if you will, or a period of time, and closes below 20%. Now the NASDAQ last month just tested 19%, so it didn't go into bear market territory, but it got awfully close. And right now we're seeing some signs of markets and earnings coming back for the NASDAQ, basically grinding its way higher. We look like we're putting in a bottom for right now. And on the NASDAQ, the Dow and the S&P. Obviously the Dow and the S&P weren't down as much, but they were down in concert as well. The S&P 500, now keep in mind, let's go historical look back at the last 50 years. There have been 7 bears. Remember, a bear is when the market goes down by 20% and closes below 20%. And there's been 7 times that's happened over the last 50 years. Now, we got close. We're not in a bear market right now. The last bear market that we have, it's a technical bear market. It was actually a technical trade. It went back to the very beginning of when we learned about the coronavirus. It was from February 2 years ago to March of 2 years ago. And it was just a 1 month period of time where the S&P, if you recall, if you fell asleep and weren't paying attention, that's when the market went down 33.9% in less than a month. So it was the quickest bear market that we've seen on a technical level. And again, at that time, there was a lot of uncertainty. And since then, markets have set new and all-time highs, just to give it up just a little bit over the last January. Now, earnings are in the square front and center. Normally they take front and center right now because earning reports are coming out. And what are we finding? Well, we're finding that corporations did really, really, really well in 2021. Earnings are up, revenue is up. However, over 75% of the companies that are reported by S&P 500 right now have said and mentioned the word inflation at some point in time, whether it's, basically the cost of goods sold are increasing, wages increasing, supply chain, chip shortages, so on and so forth. Every CEO right now is ultimately pointing to and giving guidance that is not very favorable. In fact, they're basically using this as an excuse, saying, hey, listen, I could see Fed policy, Corona-19, another variant, oil, declining profit margins, or even inflation as the biggest concern. And that's actually, if we take a step back on the investing side, that's actually a really good thing. If we take a step back and look at how markets have pulled back, because valuations were overextended, meaning too high. The multiples for the S&P and even the NASDAQ were in the mid-20s. Now they're in the teens. That just means when the price comes down, the future earnings, cash flow, the multiple on the company, the valuation is reduced. It's brought down to more of a realistic and manageable and tradable valuation, if you will. And that's where we are right now. That's what January gave us. Now, we're not out of the woods yet. Obviously, we have a lot of work to do in terms of markets, sort of trending higher, moving higher. I think we're going to see, and as I said before, if you missed our market outlook, please go there, or even we can send you the QR code, and it'll bring you right to it. It's my 45-minute outlook of where we see the market's going to go. Our outlook, asset allocation positioning, Fed policy, what we expect, and how we think markets will actually finish this year. So I encourage you to go check that out. And finally, our final update for today, it's official. Last week there were a lot of rumors. Last Friday, today is official. Tom Brady has announced it himself, and that's the only person that matters when you say, what's your future look like? He said he's retiring, therefore he's retiring. Thank you, Tom Brady. You're a huge fan. We're a huge fan in the Schein household. We have 2 black labs that we got around this time back in Corona, both brothers, and we call them Gronk for Gronkowski and Brady. So we have Gronk and Brady, our black labs. And yeah, we are huge Patriot fans in terms of when they were there. And now we love them when they were at Tampa Bay. But that duo is a dynamic duo, and there's more to report. In fact, there's more story to report on both of them and how they've lived their lives on the financial side of things. And I'll unpack that maybe on a Friday Insights, another reasons why we're such fans of them, the Gronk and Brady story. But thank you, Tom, for everything that you've done. A stellar career. We had the pleasure of actually watching Tom Brady's father at one of our local high schools. It was a companions dinner, and Tom Brady's father, this is kind of an interesting story that I could pass along. He basically said, and the question was, how do you have, such wonderful, high-performing children? And their father of 4, like my wife and I, we have 3 girls and a boy, and so do the Bradys. And Tom's dad, Tom Sr., specifically said, Tom is the underachiever relative to his 3 sisters in the family. Yeah, let me repeat that. His father, Tom Brady's father, in a loving, most caring fashion said, Tom is the most underachieving in the family because one of them's like a doctor that goes around the world saving children. Another one's like the girls are off the charts. And so when you, relative to Tom and his siblings, Tom is an underachiever according to the parents. Again, he was kind of being tongue-in-cheek about that, but he also was saying, hey, listen, you can have 4 brilliant, high-performing children. That's what we're aiming to do in the Schein household. Jack Schein's got a lot of work to do because we don't want him to be an underperformer relative to our superstar girls. But I think if we just stay focused and keep our eyes on them, that's the whole idea. But it was kind of funny to have Tom Sr. talk about Tom Jr. that way. Got more stories to report, but let's just end it at that today. Thanks for watching, and we'll see you again next time. Take care.